Welcome to the show, Ted. Appreciate you being here. Now, with the equity market at or near all-time highs, optimism is rampant due to the vaccine rollout, the reopening expectations. Give me your thoughts here, because I don't think they're as rosy as maybe some of the others in the market might think.
Well, here's the problem. I've probably been through more markets than most people, but when you get into this kind of situation, you can have an overvalued market for a couple of years, and then you go into more of a speculative overvalued market. And that's where people are doing some really crazy things and not thinking. And I think that's where we are now. And that does say it can't go on longer. It can, but it depends on what happens. But you're in the later stages for sure from looking at it, if you just notice everything that's happening.
Now, Ted, our previous guest, expectations of GDP about 5%. I'm hearing a lot on the street that 2021 is going to be a banner year, especially in the latter stages of the year. And does that equate to, a better outlook than for equities, even though the valuations for the S&P 500 are stretched on a historical basis?
Well, I think what happens is, it gets in the price before the actual happening of those things. And while I expect they're correct on that, I think it's already in the price to a degree. Now, that's not to say it's completely in the price. This may go on for a few more months. This movement, this 5.5% or 6% that's expected from a lot of the economists could very well happen, because you're coming from a really deep level. And so that's in there. But I think what's happening primarily is that you're getting a price they're putting into the price now. The problem we see, the biggest problem we see, is inflation is really picking up. And corporation stock prices don't like inflation. And if you look around, it's really picking up almost every area. And we think that's what will throw things out of whack, so to speak, as you go through the year.
Yeah, I think, some people are expecting that a little bit. Maybe a healthy 5 to 10% pullback wouldn't be a bad thing at this point due to the rise that we've seen since those last March lows. But if you look at sectors that maybe are undervalued, maybe haven't performed as well, one of them in your notes was pharma, and you like a few names there.
I do. If you look at them, they've come back down to the lower end of the ranges. You're looking at most of the pharma that we mentioned to you, which are Pfizer, Merck, Novartis, Johnson & Johnson. We own all of those, and they're somewhere between a 3 and a 4.5% dividend, which is better than the bond market, really, and good industries that should work well. They've had some pressure on them really recently. I think people think, hey, they may legislate something upon them or something, but in general, I think they're at the low end of the range, and people can own those right here.
Yeah, and I think that's a good theme to kind of hit on, Ted, is the fact that you're looking at the dividends in some of these stable companies and the yield that they're creating, because if we do get any type of pullback, the search for yield is going to be out there. And this is one of those sectors that performs well or outperforms maybe in a down market, correct?
That's what we're looking for. There's so many companies that are really in a situation where they're not making any money. We have it up to about 20% of the S&P 500, not 20%, but 60 out of 500. I shouldn't say 20%, but a lot that are not making any money at all. And we've never seen that before. And I think those companies will have a hard time going through a tough economic time. But these kinds of companies where they make money, they pay dividends, you'll fare well with them. Even though they could set back in a bear market, they'll come back.
Yeah. And then also a beaten down sector in 2020, but it's kind of made a comeback here in the early stages of 2021 is the energy sector. And you've got some names in there that you like.
We do. One of the things that I find about energy, it's been so long since the energy's been in a bear market for a long time. Really, if you go back 10 or 12 years, it's really underperformed the S&P, and it's down to where it's a very small percentage, 3% maybe of the S&P 500. And what when we look at there, we'll look at producers, like Chevron, and then royalty companies like Brigham Minerals that we own. We really like those areas where when oil goes up, they participate. And then we like the gas pipelines. If you look at Enterprise Products and Magellan, all of those are 8.5 to 9.5% dividends. And so that, to us, with inflation and that whole everything coming together, oil should go higher, the dividends should go higher, and the prices should go higher.
Now, if you take a look at that, Ted, though, in some of your names, with those big dividend yields also comes the risk of, maybe a dividend cut. I mean, we've got the backdrop of oil prices rising, which is definitely a benefit and stabilizes a lot of these companies. But do you see any risks to any of those dividends being cut?
I think they're already there. If you look at the gas pipelines, they've all restructured everything they do, paid down debt. They're probably in the best shape they've been in really in maybe 15 years. And on the production side, first of all, in Brigham Minerals we own, they wouldn't have that problem because they don't have debt, but because they just really work from a royalty standpoint. The higher the price, the more they make. And Chevron is one of the few companies in the production area that they cover their dividend. They make their dividend. Could they cut it? I guess if oil went, really low, but we just don't expect that. We think oil by the summer will be even higher than it is now, and people will look at that and say, we're back. It sort of plays on that theme you're talking about here from the economy bouncing back. If it bounces back, oil may be $20-30 undervalued right here.
Yeah, the reopen trade once again hits us. If we do see that reopen trade take place, we're definitely going to see some demand increase for a lot of those energy names. Appreciate it. Ted Oakley, he's the founder at Oxbow Advisors. Thank you so much for joining us.